General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's knock the workout. So yesterday I was thinking Wednesday would be the anchor. It's still hell, but it's looking more like Tuesday now, since we didn't close above this level here. Look where we closed. We closed at 50% of last week. That's interesting. Alright, anchor point confirmed. Based on how we closed the week, could have been viewed as Tuesday. No. M15. It's a New York reversal profile textbook. London low of the day, New York reversals, and New York OTs is like the most textbook daily profiles. New York reversal daily profile. Little candles going up, big candles going down. Little candles going down, big candles going up. out the game. Yeah, this still does need to stop playing. It's too smooth. But how we closed, we're in the tariff range. Price closed at 50% of previous week's range. So this whole week, price really didn't move. For the long-term investors, it's interesting. At least it didn't go down for them dudes. A lot of people don't trade, just invest. A lot of times we be wanting on themselves. That's people's life savings. That it's true. So this is not New York reversal. This is huge S&T. Okay, I was going to say, is it not picking this up? But it could be just like a different time frame. Because that S&T time windows only have it watch from 5 to 9. So it didn't occur then, it occurred intraday. Did I move? Okay, yeah. It occurred right here. So the market opened and then it spiked. Let's see here. Nah, we ran London for NASDAQ. And we never did over here. This was just super bearish. Not super duper, but compared to NASDAQ it is. Stayed above London for really until New York pushed it down. It's interesting. I don't know how they felt. So let's close this so I don't get it mixed up. They even close. So we never came here. So the order block here worked. Then it just was tacky. Wow, 9 o'clock came all the way back up here. So this profile is a London high today profile. Which I think is classic sale day. No, it's not classic. Classic is it has to look a certain way. I don't see too much different here. I mean, any difference. Here is where we were, but the delivery is choppy. I don't like it. So here we got the same thing. We need to stop hunting, and we stuck in the range. Similar to Q, we stuck in the tariff range. Waiting on the Supreme Court. Framework played out. Yeah, it was cool. Waiting for favorable days. Will I watch for tomorrow? This W profiles. Side study. That's where my money's at. I don't know about everybody else. I can trade the daily profiles. All right, that's that on that. Have a good day. Peace.